The feds have cut the rates finally. First drop of the year. I'm going to explain to you how that impacts affordability and possibly you as a buyer or seller right here in Snohomish County in real estate. Okay, so all that's coming up in today's market update. This is the September market update sharing August's data. Okay, so this has got a lot of changes in it. There's a lot of dynamic kind of components happening right now, a lot of interesting things happening, a lot of shifts in our market. I'm going to break those down for you and explain to you what do they mean for you. But my name is Mike Novak. My wife and I own the Novak real estate team. We're right here in Snohomish County. We've helped over 1,500 families make a move in the last 8 years right here in Snohomish County. So we live here, we work here. This is our community. If you're thinking about buying or selling, of course, reach out to us. Love to be a resource for you and see if we can help you. But let's jump right into the data and I'll explain what it means. First of all, new listings are down 2%. And this is like a little bit different than the annual number. Like if you go to the right side, it's going to say year to date. Left side is just the month. And so year to date, we've had an increase of new listings by 9%, but last month it dipped by 2%. Why is that? Well, I think a lot of sellers are seeing that there's a lot of homes sitting on the market right now. And so they're questioning if this is the right time for them to sell or not. You know, we're sitting in the middle of September right now. And we all know that during the holidays, really from Thanksgiving through Christmas, there's not a lot of buyers sitting in the market. So you think a lot of sellers just questioning, like, is now the right time or do I hold on until January to list my house? So, but year to date, we're still up 9%, which is a big jump from the previous year. Okay. That's showing up with more inventory and then softer pricing. Pending sales, 775, it was down 1%, which is about on track with the year to date. So the volume of homes going under contract is a little bit less, like marginally less than it was last year. Doesn't really mean a ton. Closed sales, though, down 13% last month, but only down 2% for the whole year. So what that tells me is that the month before this was a really slow month for pending contracts. And we saw that on a lot of our listings, a lot of agents we talked to. July was very, very slow. And I'm using July as the context here because we know that when homes go under contract, they take about a month on average to sell. So if it went under contract in July, it closed in August, okay? And so there was not that many showings happening during this time period. Showings have picked up a little bit since school's gotten back into session. September is traditionally a pretty good month for real estate, same with October. And so we've seen a big uptick in the last couple of weeks, but this tells us that July was very, very slow for sales activity on homes that were sitting on the market. Okay. Days on market. How long does it take to sell a house when it first comes on? This has changed a lot, you guys, and this is very sub-market and price dependent. But as a whole, if we just look at Snohomish County, we're up about 42% to 30 days on the market. That's the average of how long it takes to put a home on the market and accept an offer, okay? This is dramatically different than the COVID market times where you could list a home and sell it in 2 days, 7 hours, 7 days, whatever. It takes a little bit of time to sell a house. This is historically speaking still very, very fast, but it is massively up from this time last year. And what is driving that? Well, of course, it is the affordability challenges, and it's the fact that there's a lot more homes on the market. There's more options for buyers to choose from, so they're a little bit pickier. And because there's so many homes sitting there, then it results in some of them selling and some of them just continuing to be on the market, okay? Year to date, we're up 30% on this. So that just tells us, this has been a sluggish year for listings and they're sitting longer on the market when they do come on. Where you price your home matters massively right now. It does not matter what something closed for 6 months ago. That's going to be worth a lot more than what your home is worth today, just because the market's been shifting so fast. In the last 3 or 4 months, inventory has massively gone up, which means it's softened pricing. Okay, so stop looking at the comps from 6 months ago. Instead, look at what's actively on the market and compare and contrast it to your house and figure out how you need to position your home from a pricing and a marketing perspective to make it stand out. Okay, we know that buyers shop by comparison, and they're going to compare and contrast your house to every other house in the neighborhood. A couple of years ago, there was only like 1 or 2 homes per neighborhood. Now there's like 10. So buyers have the ability to pick and choose and really determine which home they're going to put an offer on, or maybe put an offer on multiple homes and figure out which one they're going to get the best deal on. I've seen that happening too. So this is a really big change, days on market, and it's a big change in expectations for sellers. Okay. The average sale price, $887,000, which is still up 2% from last year. And year to date, we're still up 3%. So we're still in price appreciation territory. I'm a little bit surprised that this hasn't flattened to zero or even gone down a little bit with the huge increase in inventory that we've seen. The Fed cutting the rates, that's kind of like the X factor. If that hadn't happened, I would say we're definitely going to be seeing price depreciation occurring here soon. But with the Fed cutting rates and signaling they're going to cut rates 2 more times this year, I think you may actually see the homes not dip at all. I think you're just going to see this inventory kind of be a temporary blip on the radar, and the inventory is going to go away very, very fast as more buyers have increased purchase power from the decrease in rates, and they snap up that inventory very fast. Okay? So this is good for homeowners. Your value is not plummeting like some people think. It's holding very steady, actually. And for context, real estate traditionally appreciates about 3% year over year. So it's like right on track with that for the year. Percent of list price received, we're sitting at 99%. That means that most homes are selling for very close to asking price. But a lot of price reductions are occurring. So keep that in mind as you're thinking about that. And also keep in mind that a lot of seller concessions are happening right now that this number is not showing you. Seller concessions are like where a seller gives a buyer a certain amount of money towards their closing costs, a rate buy down, whatever. I mean, I've negotiated a $25,000 credit for my buyers in the last couple months, a $50,000 credit for my buyers. There's some juicy credits being passed around by sellers right now to buyers, and this 99% number does not take that into account. So I'm going to be very clear with you about that. All right, next one, inventory of homes for sale. And this kind of tells you the story of price softening. It's up 39%. It's still not like a crazy amount of houses, 1,600 homes in the county, but it is up a lot from the same time last year. Okay. That means that buyers have options and sellers have competition. You got to really think about what that means for you. On buyers, it means that you can be more picky. You can negotiate harder. A couple of years ago, you couldn't negotiate at all, but you have options now, which is fantastic. This is like a neutral kind of balanced feeling market. For sellers, it means that you need to price your home well. If you don't price it correctly, if you don't market it well, it's just going to sit there. No one's going to buy it, plain and simple. That's just the facts. Okay. So the inventory of homes way up. Usually when inventory goes up, prices start to go down. That's why I'm surprised that prices haven't actually dropped yet. They still may, but again, the Fed rate's kind of the X factor that could help avoid that. Okay. So the months of inventory supply, how long would it take to sell every home that's on the market after today? If no other homes came on the market, we're sitting at 2.5 months. It was 1.8 last year. Okay. So we're up about 39%. It's a big jump in inventory, but this is kind of what we expected, right? This is a return to a healthy, balanced, neutral market. It's not just a seller's market where they can beat up buyers on all terms and negotiating and everything else. Real estate is designed to be a two-way negotiation between buyers and sellers to find an equitable deal for both parties that works. Okay. And so we're seeing the return of that with all of this data. Let's break down the Fed news yesterday. They just announced it yesterday that they were going to drop the cost of borrowing by a 1/4 basis point. The 1/4 basis point, I think, is what the market expected. I think if they had dropped it 1/2 basis point, that would have signaled that the Fed was very worried about where the economy is going. So this is kind of a good thing, I think. They also signaled that they plan to drop the rate 2 more times this year. So the market's going to start pricing that in, sooner than later into mortgage rates. You got to remember the Fed rate is different than mortgage rates. Okay. They do connect in some way, shape, or form, but they are not directly connected. The cost of a mortgage is more directly connected to a 10-year treasury bond. So just keep that in mind. Everyone thinks that when they drop the Fed rates by a 1/4 point, that's immediately lowering the interest rates for mortgage by a 1/4 point. It's just not the way it works. Okay. So in practical numbers, though, what does this mean on like a $600,000 house? Well, if you put down like a $20,000 payment and the rate went down a 1/4 point, let's just say it did, that would save you about $79 a month. Okay, so it's a decent savings, and it would get you about $28,000 more in purchase power. You could afford $28,000 more in a house because of that increase in monthly payment that you can now afford. Okay, so the thing that I want to remind you, if you are a buyer and you're watching what's happening right now, a lot of buyers are saying, gosh, I'm going to wait for rates to go down further before I buy a house. And I say this every month. I'm going to say it again this month. Waiting for rates to go down is the same as saying you're waiting for prices to go up. Those two things work in opposition of one another. When rates go down, prices go up. It's just that simple, okay? When rates go up, prices soften and come down. So keep that in mind. You have an amazing opportunity with this increase in inventory if you're a buyer right now to negotiate a fantastic deal. Take advantage of that. Go get a seller concession for your buy down. Maybe get a 2-1 buy down to get a 2% lower interest rate the first year on the home and a 1% lower interest rate the next year on the house. But take advantage of this market where you've got options and you've got the ability to negotiate, because I don't know if you're going to have that ability come springtime of 2026. I could see a much more competitive market showing up here, right, in Snohomish County as the Fed continues to lower rates. I think this inventory is going to go away very quickly. And like I've said multiple times, when inventory goes away fast, then you see prices go up rapidly. Okay. So that's the market update for you. Again, think about buying, think about selling, even if you're 3 to 6 months out, please reach out to me. We'd love to be a resource for you, coach you through that process. Buying or selling a home is a huge financial decision. And as such, it's one of those things that really rewards proper planning and preparation. You don't want to wing it. You don't want to shoot from the hip. And you don't want to not have a very specific and unique plan to your situation. As always, reach out to me. I'm here to help.